So hello and welcome everybody to the Texas REIAs. The Texas REIAs is the largest network of real estate investor associations in the great state of Texas, with over 150,000 members, participants, and attendees going back to 2003. Why do you care? Because if you have the slightest interest in real estate, the very first thing to do is to join your local real estate investor association, because that's how you get plugged in and get access to the 257 vendors, the 25,000 buyers, the 1,000 private money lenders, and all the resources that are offered by the Texas REIAs. And one of the resources that we offer is market data. So we're going to do a pretty quick market update. I'm a little behind on where I wanted to be on the schedule, but we're going to talk to you and tell you about what's going on in the marketplace right now. So let me pull up some data. This is Texas, and I'll give you a couple numbers. The average price house in Texas is $409,000. That's the average price house in Texas, and it's up 2% over 1 year ago. So practically flat, really hasn't moved much. The median price here in Texas, $330,000, down 1% compared to a year ago. Again, basically flat. But if you really want just to look at one number that's really going to tell you kind of what's going on, I would say this is the number to always watch. Months of inventory, months of inventory. What is months of inventory? This is what investors use. The way to think about months of inventory is like this. If you took all the houses for sale on the MLS and you stopped adding any more houses, so we're just going to sell what we got until we're done, until we're out of houses. How long would the inventory last? How long before the shelves are empty? And the answer is 4.5 months. Okay, 4.5 months, which is also, if you think about it, the average amount of time it takes to sell one house. Now, average. Some houses take a lot longer. Some houses are much cheaper houses are faster, more expensive houses tend to be longer, but the average is 4.5 months. Now, let me put that into perspective. What does that mean? They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If you're right around 6 months of inventory, you're in a neutral market. So what kind of market are we in? Seller's market. Yeah. Now, it's a lukewarm seller's market. A year ago, we had 3.6 months of inventory. When we had 3.6 months of inventory, I would call that a hot seller's market. We're no longer in a hot seller's market, we're in a lukewarm seller's market, but we're still in a seller's market. In fact, we haven't been in a buyer's market in years, and there's a reason. We're going to talk about the reason. But let's look at the history. 2021, prices went up 18% in 1 year. 2022 went up another 10.7% in 1 year. In 2023, flattened out. 2024, flattened out. And at the end of 24, it came up a little bit. Why did it come up a little bit? Because what happened at the end of 24? Interest rates did what? They came down a little bit, and prices, went up a little bit. Not much, just a little bit. And that's pretty much where we are to this day. Now, I'll go through one city, Dallas. We're here in Dallas. The average price house in Dallas, second most expensive city in Texas, $492, pretty high, up 2%. Median price, $396.5, right, up 1%. Months of inventory, 3.5 months of inventory. Dallas is the hottest market in Texas. It is the strongest seller's market in Texas. So you guys are in the hottest market in Texas. Leases, up 8%. Prices down a little bit. 3%. History, Dallas history, 2021 up 20%, 2022 up another 15%, 2023 flat, basically up 1%, flat, 2024 flat, up 2%. I don't know why, but historically Dallas has always been the bellwether of Texas. I don't know why. It's always been the first mover, the first one to go up, first one to go down. So if you want to get an idea of like where the market's going, you always look at Dallas as the first mover. I don't know why. There's certain things that move before other things, like condominiums. We call condominiums the canary in the coal mine. It's the first mover. When the market starts to soften, condos are the first thing to go down. When the market comes back, condos are the last thing to come back. So if you can sell a condo, you can sell anything, right? So like condominium inventory in Dallas is going to be the first mover. So where are we going? Well, let's take a look at what's driving the market. The economy is pretty good, not bad. Now, real estate doesn't actually care that much about the economy. During the Great Depression, real estate prices went down a whopping 6%, almost nothing. During the Great Pandemic, right, another 100-year event, real estate prices went up 30%. So real estate's not directly affected by the economy, it's indirectly affected. Real estate really is affected by just two things, supply and demand. That's all it is, supply and demand. So only in as much as things affect supply and demand do they affect real estate. Now, overall, the economy is okay. Consumer confidence is right in the middle, just below the middle, but right in the middle. Unemployment's good. Here in Texas, it's good. Uh-oh. Something happened to my slide. Oops, my Zoom meeting is going down. Why is my Zoom meeting going down? Oh, my Zoom meeting is back. So there we go. So, boom. Oops, sorry about that. See if I can get back to where we were. Oh, here's where we were. Okay, so yeah, the economy is, unemployment is good, job growth in Texas is good. Stock market lately has gone down. Last year it went up, you know, and again, stocks don't affect real estate other than when people are doing well in the stock market, they feel wealthier, right? They're a little more likely to buy real estate. Business in Texas is good. So overall, the economy is neutral to good. What else affects real estate? Affordability. Interest rates went up. When interest rates go up, what happens? Houses are less affordable, right? When they're less affordable, there's fewer buyers, fewer people can afford them. Fewer buyers means lower demand. So normally when interest rates go up, home prices come down. But something interesting is happening. Normally, 2/3 of houses for sale are resale, and 1/3 are new construction. That's the normal mix. Right now, it's inverted. Right now, 2/3 of the houses that are being sold are new construction. Only 1/3 are resale. How come people aren't selling their house? What's going on? What's going on with my slide? My internet's going up and down, so every time I lose the internet, my slide pops off for some reason. Yeah, so what's going on? Why aren't people selling their house? Because they all got a 3% mortgage and they don't want to lose it. And because they don't want to lose their mortgage, they're holding their house off the market. Normally right now people should be moving up, right? Hey, honey, let's get a bigger, nicer house, but nobody wants to sell their house. I'm exaggerating a little, not nobody, but most people. Because they don't want to lose their 3% mortgage. And because of that, the supply has gone down. So yes, the demand has gone down, but the supply has gone down. So how come if the demand went down, the prices didn't go down? Because the supply also went down. And when you have the supply less and demand less, prices are flat. House price trajectory is flat. Housing supply, active listings flat. Months of inventory were pretty good. That's a seller's market. Housing permits trajectory, we're not building enough houses to keep up with the demand. Labor growth, that's another problem. Contractors, we're not replacing, the average general contractor is 58 years old and they keep getting older and they're not getting replaced. So I got some advice, okay? If you have a teenager, don't send them to college. Give them a hammer, seriously. Right? General contractors are making a fortune. I know plumbers that are pulling down 7 figures. Plumbers making $1 million a year. Plumbers, $1 million a year. Don't go to college. Don't get student debt. Don't work for some idiot that you don't like, right? Working at a job you can't stand. Olivia, did you have an announcement to make?
Yes, online is not showing the screen anymore.
Online? Well, my internet dropped, so let me see if we can get the online folks. Sorry, guys, online. We'll get you fixed up again. So, oh, poopy. Online is not showing up anymore. That's not my fault. That's the internet's fault. It's my fault. Hold on online so we can fix you. We're going to try to fix online. See if we can fix you guys online. Yes.
He answered all the questions as he does. He's debugging on
Not only is online not working, but now live is not working. Nothing's working. All right. Well, guys, I'm so frustrated with online. It's not my fault, guys. We'll get you fixed. But right now, for whatever reason, yeah, the power went out for a minute, and you guys all dropped out. And because you all dropped out, we lost you. So let's see if we can get you back. Boom. And let's see if we can get this back. It's not going to work. All right. Well, I'll tell you what. We have a plan B. We always have a plan B. We can see me, but let me share the slide online. All right. So let's see if we can get you guys online to see online. Okay. We're ready. Okay. And then housing demand. Closed sales trajectory is flat. Pending sales trajectory is flat. Migration, this should really be the biggest bullet on the slide. What is migration? Migration is the ratio of people moving in versus people moving out. So here's the thing. Last year, California lost 500,000 people. Okay, last year, Texas gained 500,000 people. Okay, where do you think they went? Yeah, and then there's another 10 million, we don't know where they went, but a lot of them are here too. So the point is, we have huge migration. So people keep moving here, people keep having babies, we're not building enough houses, we have a booming demand, not enough supply. When you have a booming demand, not enough supply, everybody's got to live somewhere. They either got to live in an apartment or they got to live in a house. The apartment buildings are full, the houses are full, there's not enough of them. And that bullet there is what's pushing everything up, regardless of everything else that's going on. And then there's some wild cards, some tariff things going around, new president in town, et cetera. So our market forecast, and by the way, this all comes from Texas A&M School of Real Estate and a bunch of online resources. We're not here to try to twist your arm or make you believe anything. Okay, when the market's going up, we say it's going up. When it's going down, we tell you it's going down, right? And we even give you a forecast, right? So I'll give you the forecast. That was it. If you were waiting for some big correction, that was probably it. It was flat for a long time and then it started going up a little bit. But that being said, we don't really expect much from here. Interest rates will probably drop a little bit between now and the end of the year. Maybe a little more, maybe a little less, but they're going to drop probably. And that should boost sales a little bit, but not a lot. We expect about a 2% rebound in volume and about a 2% increase in price. So that's about all that we expect.